All right. Hello, everybody. Welcome back to the channel. We are here for another episode of Tech Bros. Got a lot of stuff to talk about in the world of tech. I'm here with Tanner and Roy. What's up, guys? How are you?
Good.
Doing well.
How are you?
I am doing good. Here's the question. If we do get into World War III, are we buying more HUD?
It's a bad time for everybody.
But, like, we're buying more HUD, right? Like,
I'm not selling. I'll just say that.
Yeah, like I'm definitely not selling. Robinhood would be one of the companies that would have an exponentially worse time, I think.
Yeah.
Because even right now, I mean, the markets are probably going to open up down tomorrow, if I were to guess, just because of US posturing closer to the Middle East. I'm sure that's not going to bode well for markets. I don't know. But I think that Robinhood, especially betting on the total bullishness of the markets, would be hurt by that.
Yeah, I don't personally like to get out of long-term positions that are still long-term, that the thesis is intact, even if I'm thinking that they might go down. What I might do is take some profits, which I'm not planning to do in Robinhood. I've done that in the past already. I think most of my shares right now are free shares. So, you know, that can make sense when you're entering some uncertain macro, just to take something off the table. You can always buy puts instead of selling puts, just for some downside protection. But I don't plan to do anything with Robinhood's position. I did close out my vertical spreads, which were up, I don't know, like a 3x, something like that. Just made sense to take some off the table because we may be buying a Tesla, and we want to keep the same level of debt. We'll take advantage of the low APR, but we'll just knock out some debt before we buy this.
they're giving you 2% APR?
Yeah.
It's not bad. Not bad.
Yeah,
The 48-hour demo was positive.
We're still in the middle of it. It's a good vehicle. We knew it was. I mean, we own the Model 3 2022, but it seems like the stocks will probably take maybe a month or two to get used to the lack of stocks. Yeah, it's like, just the ride quality is so much better than the Model 3. It's very smooth. The suspension handles extremely well. Soundproofing is good. I haven't tried the speakers yet. I've heard that those are great. Full self-driving on the hardware stack 4 is just not quite impeccable, but it's close. It's mostly impeccable.
That's the new Model Y?
Yeah, this is a new Model Y.
Does that have the sound dampening as well, like the refresh Model 3?
Yes. Yeah, it's noticeable. There's a lot of like little changes that, unless you've been in the other vehicle before, you probably wouldn't notice. But vented seats, of course, are one of those things that we love. And this time, finally, my wife agrees with me. White seats. I mean, you got to get a Tesla with white seats. You got a Tesla with white seats, right, Amit?
Yes, and I love it.
Got to do it that way.
Yeah,
it's a staple.
When is Tanner getting a Tesla? He's the last one. We got to get him.
Yeah, I mean, whenever I need a car, which truly might not ever happen. I mean, if Robotaxi goes the way that everyone wants it to, I might ride my car out for the next 2 years and then sell it, and then that's it. Like, I don't drive enough. That's the problem. My car's going to last me forever because I don't drive.
Yeah.
You know, I remember getting insurance for my vehicle, and they're like, how often do you drive? I was like, probably less than 1,000 kilometers a year. Like, I don't know what that is for you guys, like 700 miles or less.
And that's going to be something for a lot of people in the future. Just the idea of not driving as much.
Yeah. I drive about 20,000 miles a year, so I need it.
I don't go anywhere. You know, I won't even go to Mexico.
I was just about to say, you're not going to Mexico.
I saw your face. I knew you were going to come. But yeah, so for me, I mean, the Robotaxi thing, I know Steve has been harping on $1 a mile being like unaffordable. I'll definitely pay it. I mean, I don't drive enough. So, but yeah. Someone just wrote kilometer LOL.
He's right.
You're the only people in the world. Everyone else uses a kilometer. Like, anyway. But we're the superpower. Yeah.
That's fair. That's fair. Okay, we got a bunch of news this week. Obviously a ton of Robinhood stuff, so let's get started with that. I think the first thing is let's get main metrics out of the way. So we got these main metric numbers. I want to get everyone's take on it. 180 million option contracts, 180 billion equity trading volumes, 9 billion margin book balances, 31 billion cash sweep, 255 billion AUC, 12 billion crypto volumes. Those were kind of like the highlights. The things that were, one could argue, a little bit not as good. 3.5 billion net deposits. First time we've seen a 3 on that number in about 7 months. So that one definitely slowed down. And then funded customers, we added 105,000, but they got rid of 100,000. So we added on a net basis 5,000, which is the first time Robinhood's ever reported it like this. And we might see metrics like that similar going into the future. Roy, your takeaway from these metrics?
So question on the net deposits. This was a month without incentives. Is that right?
Correct.
Yeah. So that kind of gives us a baseline what to expect as far as deposits when they don't do incentives. And it's been a long time since there's been a full month without incentives. I can't even remember the last time. They've always had something going on. So I love that, just so we can kind of have that as a baseline. And it doesn't, tell us everything as far as like whether an incentive is working or not. But I mean, obviously they work. So I don't know. Like they're positioned very, very well. Of course, the biggest, most profitable section is crypto and then options. It's good seeing equity up. It doesn't hurt, but that's a very small margin product. But yeah, like if they're going in the right direction, they're going to have quarters that are some that are stronger, some that are weaker. Crypto is, a little bit softer than I expected, but it's not a bad print. I'd love to see that continue to go up. We'll see if Bitcoin does or not. So,
yeah, I mean, overall, from what we saw, May color to this, increased the revenue by about 13 million. So I'm happy. Like they always downplay it. They said, it'll be roughly around 11 billion. Then they do 11.7 billion. I mean, it's much closer to the high end of that than I would have expected. So overall, I'm happy to see it. Like we said, it's cool to see a baseline for, without incentives. Don't do it again. I no longer need to see a baseline.
You realize the incentives cost us money, right? So it's not the worst thing.
Well, but the reason why they do it is it gives them money. So there is a cost. They factored it in, like whether the payoff period is 12 months, 15 months, 24 months, depending on the incentive. I mean, they work. They're doing it for a reason. It helps them grow aggressively. It will be interesting to just kind of monitor where they're at on that, as far as with Bitstamp coming into the fold. And also, sometime this year, they'll launch the SIPs and ISAs in the UK. And it'll be really interesting to see how that ticks up too.
So if there is no new incentives on this money, I assume that positively affects margin. So maybe we'll have to click up the take rate on some of the products that we have, like equities, options, crypto. And then to add on to the Bitstamp commentary, because it did get added in Q2, that will be negatively affecting margins.
Yeah.
So it negatively affects adjusted EBITDA and net income. They're also going to be adding approximately, if I remember off the top of my head, 65 million additional dollars for operational costs over the next for the rest of the year, because they said, so it'll be extra operational costs. But I think it was around, if you actually think about the real cost of Bitstamp, it was somewhere around 265 million rather than 200 million. Overall, we get 500,000 new added funded customers that are exclusively a part of our most healthy margined business, which is crypto. So take that with what you will. I mean, I'm pretty happy about the overall purchase. And I mean, having our own exchange will be crazy. I cannot wait to see what, Robinhood actually does.
Yeah, I agree. I think the expenses towards Bitstamp are good expenses. Nonetheless, they will affect margins, but it seems like they've already been counting revenue from Bitstamp as well over the past 12 months. So that is something that hopefully can scale from an institutional side. In terms of these metrics, I agree. So I agree. I want to see net deposits every month at that like $5 to $7 billion mark. It is nice to know, though, to Roy's point, that without any incentives, $3.5 billion in 1 month, this company can get. I mean, if we're not wrong and they had zero incentives for the month of May, then that's a natural $3.5 billion leaving Bank of America, Chase, or any other financial institution and going into Robinhood. So if they can do incentives and get that back to $5 billion every month, then that would be awesome. But it is nice to know that's a baseline. And even with the decline in deposits over the past basically 7 months, everything else is at essentially all-time highs outside of crypto. Yep. So it means the activity of these users is pretty sticky, even if the net deposits is not attracting net new assets.
Yeah, no, I think that's also very exciting. I think that the market will be smart enough to not just look at the numbers that they're putting out in terms of margin, because if I remember correctly, trade PMR is going to negatively affect margins, and then now Bitstamp is going to negatively affect margins. And I bet you WonderFi, whenever that closes, will also, they're profitable, but I don't think that they're as profitable as Robinhood.
Which is also probably the reason why they didn't do any incentives in May, because they already had 2 things they know that's going to at least take margins down in Q2.
Yeah. And
Roy, you're muted.
Yeah, I was going to say that might be the case of the reason why they didn't do that. They also might have wanted a baseline too, because it's been a long time since they've had that, and they can, they have the internal numbers, they know who's using what, but it's still just a guess until you actually have a baseline like this just to tell you where you're at. And so then this really helps them even hone in more to see if, like, okay, our baseline is 3.5, and then they do some sort of incentive and they get like 4.6. It's like, well, is this actually worth doing over what our baseline is? So it's going to help them be even more effective. And I like, honestly, one of my favorite things that Robinhood did last year was pull away from that 1% everything match. Simply because they're like, hey, we're going to honor it through like mid-December, but it was not working to do what we wanted it to do. And they didn't mind the quick pivot away from something that wasn't working as an incentive. And as a shareholder, like, I love that. I think that's vital for a company just to remain agile, not just be like, well, we said we're going to do it, so we're just going to, eat the cost of it for the next like 10 years. That'd be terrible.
Yeah, that was a big deal. I was at that first gold event when they announced 1% on every single dollar you put in. And that was a bit like, everyone was like, holy crap. And then 5 months later, they're like, it's not working. And so the question then becomes, do you take the PR hit and do you like deal with, people getting upset? Or do you just say, look, this is a business. We got to make things work, and pivot. And to your point, Roy, they pivoted and it ended up working.
Yeah.
Having said that, one last thing before we get into the big credit card discussion with Coinbase that I know a lot of people are interested in. Gold subscribers. So they spent $1 million for a 2-week Summer of Gold promotion. Each member got $8.69, which means if you divide $1 million by 869, they added 115,000 gold members. Tanner, any thoughts on this type of marketing as well for them?
Yeah, I mean, it's insanely profitable, right? You're paying $8.69 to get a $5 a month user. Okay, well, if they do 2 months, which they will, because the APYs, the benefits on margin, the the credit card, the benefits for options trading, it's a no-brainer. Keep doing this. And they have. I mean, this is what, the 3rd, 4th one that we've done?
Yeah.
So it's clearly working. Yeah.
And that gold, gives them the flywheel effect just really fires on overdrive with gold. So like we've seen as far as how monetized those customers are, the ARPU like really, really spikes under the gold. So it's awesome that they're growing that. And
yeah, just keep doing that. I think the worry is because they're not actually getting an $8 CAC. They're getting, like, what was the last one? That actually would be a good video. Compared to the last one that they did $1 million on, is it getting better or worse?
I think it was relatively the same, if I'm not wrong.
That's what I thought. It was around $8 or something like this.
Yeah, exactly.
Yeah, so how many times can you do that while still gaining new customers? And do you have to wait it out to, like, are you only converting Robinhood users that have come onto the platform but not switched?
Well, so here's the thing. The person that sent me the screenshot told me they paid the $50 up front for the yearly subscription. I don't know if every single of the
Well, there you go.
115,000. Yeah, I don't know if every single 115,000 paid that $50 a month, but I do know in the terms and conditions, you don't get to keep the 869 unless you are a gold member for a year. So theoretically, they should be spending 870 to get 50 back.
Yeah, with someone just doing nothing in that account, like, yeah, right. You know, you're going to be getting all sorts of benefits and putting in more cash and everything, which is just going to fill Robinhood's pockets even more. I mean, it's a infinite money glitch.
Yeah.
Yeah, they really want you to test out those products to get the full benefit of the gold membership. I mean, that way there's a severe switching cost. If you are like, you know what, I'm going to go over after Schwab because they're doing some sort of special switching thing that they're going to give me 1% match or something. You'll look at the gold features and be like, well, maybe not.
And you know what? The cost to serve on Robinhood's also really low. So it's not like those users are going to be adding any additional expenses. I mean, they will, but to what marginal degree? $1 per customer,
Right.
you know?
Okay, so let's talk about the beauty of capitalism, which is competition. Tanner, you had a great post on X. I'm gonna take it off to you. What are we looking at?
Coinbase just showed off their new Coinbase One Basic. So before, this was a $30 a month subscription for really high zero trading fee limits. Now they're showing off zero trading fees on only $500 of crypto trades a month, which is very low. But with that, you also have 4.5% APY on the first $10,000 that you store in that account in their USDC. And it also comes with a credit card, Coinbase One's Amex card, which is up to 4% cash back. Well, actually, sorry, not cash back, Bitcoin back, all for the exact same price that you would get Robinhood Gold for, which is $5 a month or $50 a year. I'm curious your guys' thoughts.
When I first saw this, and we don't know like the details as far as how many assets, unless they've recently rolled that out, what you need to get that 4%. But it feels like that they're like, hey, this is working well for Robinhood's ecosystem. Let's do something similar and make it very specific to crypto. Smart idea by Coinbase. It'll probably work. And I can't wait for all the bears out there to just talk about how Coinbase is making a horrible mistake because they're offering up to 4%. Except that probably won't happen because the focus is on Robinhood.
For real, no one has brought this up yet, but it's on the Amex network. So everyone always talks about, the why Robinhood Gold won't work is because the amount of interchange revenue that you make per transaction is set to a certain amount or a slight range. Okay. But on Amex, their interchange range is higher than Visa and MasterCards. So I'm surprised that Robinhood and SoFi and all these other modern tech companies haven't gone with Amex. But really, honestly, I think it's the outbound sales team of companies like Amex that have been really strong to attract fintech companies. But Brian Armstrong's very different, and Coinbase will do things different.
Yeah.
Wait, why do you think Hood's not on Amex over Visa?
I mean, probably just easier setup, easier solutions for companies like Amex or MasterCard or Visa. Plus, the acceptance rate of those networks are also much higher. Amex can be chosen to be not selected by merchants at a lot of places.
Okay,
but the amount that you make from those networks is much, much higher.
Okay, so my question here is 4% cash back, essentially Bitcoin back. How attractive do you guys think that is to someone who? Well, so I use the gold card every day. Would someone like me who's getting 3% cash back, do you like would a user like me be incentivized, you think, to go with Coinbase instead to get an extra percent but in Bitcoin?
You've got to really be a crypto guy, but if you are, then that's compelling. But one of the challenges too is there's a lot of crypto guys that are like, hey, not your keys, not your crypto. And so they might keep, a few $1,000 on Coinbase or something like that. But maybe they're traded back and forth with Coinbase One. That's really who it's marketing for, is the, like the day trader that's doing this with crypto on the Coinbase One platform. And if they have $100,000 of assets or whatever it is to get 4%, they're going to want the card. It's going to create a stickier ecosystem for them. But for people that are like, skeptical of holding their crypto on an exchange like that, no, that incentive won't be enough. They might do it just for the 2% because everybody qualifies for that. But 2% cashback cards are pretty dime a dozen these days. So yeah, what I really think it's going to do is just create a little bit stickier ecosystem for those well clients that they have that have a lot of assets on their platform and they want to keep them there. They're like, here's an incentive for you to keep it. And I think that'll work.
For real, I think Brian has made mistakes not getting into traditional finance for a lot of different means. I think there was a lot of easy wins for Coinbase. But Brian knows that finance is coming to him. And whenever it comes to equity trades, they will offer that whenever it is tokenized, you know? Sure. So I think that they are kind of the baton runner in a way. I don't know what the setup person that starts to run before the baton is passed to them. That's really what I think Brian's doing here. And tokenization and Bitcoin back on cards and stablecoin adoption is all leading to Coinbase's benefit. So that I would not sleep on. I would not sleep on Coinbase because in the past they could have had some easy layups and didn't take them. I would see where things are going and realize how unbelievably well positioned they are. And the things that they've done poorly, which I thought Robinhood was going to suffer from, was just, you know, worse pricing and all of these things for different products. It looks like Coinbase is willing to lower pricing, you know, increase the benefits. If you're not buying more than $500 in crypto every month, Coinbase is cheaper than Robinhood at this point.
Okay, so let's get into your suggestion. Tanner said, what are the chances that Hood offers to match 0 trading fees on up to $500 in crypto trades? Crypto is the last massive product line that Robinhood Gold does not have direct benefits for, which is correct. A similar offering could promote cross-selling to other products. Once you have already decided to pay for the subscription, the higher APY, gold credit card, better margin pricing, all of that comes free. So do you think, I guess the broader question is, do you think Robinhood takes this Coinbase thing seriously?
I don't think it changes their plans, but I do think that when they have their crypto event at the end of this month, that there will be some benefits to being a gold member, and that might be like 0 trading fee for a small amount or something like that. I don't know, but I don't think that they're too concerned. I think it's 2 different types of clients.
Yeah,
and I think Robinhood knows, like, the guy that's day trading crypto is probably not going to use their platform, at least not yet. There's just, you know, a lot fewer options and everything. Maybe when Bitstamp is fully integrated, like, we'll see. But no, I don't think that they perceive this as a threat. Like, this is really a threat, though. And this is one of those things where, like, it goes back to the Robinhood and SoFi thing, which I don't want to, you know, go back to. But the competition that they're eating is not so much each other. There is a little bit of that, but it's really the dinosaurs that are out there that have not evolved, that have not moved on, that have not kept pace with technology. That's who they're going for. And that's the case here with Robinhood and also Coinbase, is they're going to be so far ahead of, you know, most anybody else. There's DeFi and there's niche products as well, but for the most part, like, you're not going to go to SoFi Invest when they relaunch the crypto platform and do heavy trading on that. You're just not. You're going to go with, you know, a DeFi platform, Robinhood, Coinbase.
Yeah, I think that's true. I don't think that Robinhood's going to take it seriously, thinking that it's going to eat away at, you know, their customers immediately. There is a tendency for Vlad, very different than SoFi's Anthony Noto, where Anthony Noto is trying to beat like 80% of his competition. Vlad wants to beat everyone.
Yeah.
And so I think that I spoke with Vlad. And he said, or we were talking about overall fintech businesses. I said, you know, how's Block doing? How's SoFi doing? How's Nubank doing? How are all these companies doing? Who do you fear? You know? And he said, the one engineering team that is completely on par with us, that we really do think is A++, is Coinbase's team.
Yeah.
Okay. And that was at the Robinhood Summit. So last year that I asked him that question. That's pretty interesting to know. And now that finance is kind of coming to them, how much they are going to be butting heads in the future of premium, or if you want to call them freemium, I guess, card tiers, or you know, tokenized assets. Like Robinhood is really running, but they're going right into Coinbase's space, which I find really interesting. So I think there will be a lot of head-to-head competition.
Yeah, and we know that Hood's been taking trading volumes away from Coinbase. So you would imagine Brian Armstrong is looking at them and seeing the potential dominance they've had in the United States when it comes to being a crypto exchange start to become challenged. I think for someone like me, I wouldn't switch to the credit card simply because the cash back that I get goes right into my brokerage and then I buy stocks. But if I was a Bitcoin bro, like a Bitcoin maxi, I think there's no way in hell you don't get this card. I mean,
if you're on Coinbase, especially if you're doing direct deposit to Coinbase, I don't see how you don't get it.
Yeah.
You know, and especially if they offer you such a free way to convert that Bitcoin back to fiat, which essentially they're offering you 0% off ramps here. Like if someone, I don't own any gold. I'm not a gold bug at all. But if the brokerage that I'm currently using was really into gold, the way that Coinbase or Robinhood are potentially into their certain products, and they offered me a 5% cashback card, but it's gold back. But they're offering me a free way to offset that back to fiat. I wouldn't care. I mean, like, give me all the gold you could possibly get, and then I'll just turn it into cash when I need it.
Yeah.
You know? So I think Bitcoin's volatility is going down. People would not mind this card.
Do you guys have an issue with them being so slow on the rollout?
Who?
Hood with the gold cards?
No.
Okay, so can we just spend 5 minutes so that I can clip this and send it to people every time they get upset? Like, why is it okay that Hood's not giving gold cards and has had people on a wait list for a year and a half?
Because credit cards are the only product that they have put out to date that could harm their business. Defaults on credit cards could harm Robinhood. So they've never tried a credit card before. They need to find out how this works, the customers that they want to go after, the spending limits that they need to see customer behavior. So without knowing that information, to roll it out could be a very dangerous thing for them to do. They are actually going faster than traditional credit card launches. They are. But because the wait list, there's never been a credit card wait list like this. This doesn't happen. These aren't fun products. Robinhood has made something traditional and old school, and they've made it fun. And so there's this long lineup to try this roller coaster. But at the end of the day, it's a credit card, right? And they're rolling it out faster than most companies would. But there's 3 million people waiting for I was going to say a piece of plastic, a piece of really nice metal. But
I like this. Keep the passion, Tanner. I'm going to clip this and just send it. I'm literally going to make this a Twitter video every time someone complains, because I get 10 complaints a day of where's my card. It's like, here, listen to Tanner. Listen to Tanner talk about it.
And let me add to it too. Like, so with this type of business, we've already talked about the incentives in the past, and there's a cost for acquiring new users. They don't have that so much with the credit card. Like, this is a vehicle that will acquire new users. There's people like literally that are not on Robinhood now that'll be, or at least much, that will get into this, this just empowers their entire flywheel. And the best thing about it is, and I know this from personal experiences, I was annoyed being on the wait list. I was like, man, this is terrible. I hate this. And the moment I got the card, all of that went away. And probably 99.9% of people that are on the wait list will feel exactly the same way. Once they get the card, they'll be like, okay, great, I got the card. I'm maybe like, some people will be just mildly annoyed it took so long, but that just tells you like how good the product is. But they, like to Tanner's point, they have to make sure it works, that it doesn't break their ecosystem. And I'd rather they roll it out more slowly. Them going from 100,000 to 200,000, like it's easier, at that point, because you already have some data. And perhaps next year they'll go up to like, 800,000 or something like that. It's not like crazy wild. But I, as an investor, I appreciate them being careful.
This is another thing too, is that they cannot control the wait list. They can only control the cards being put out. So if they thought, okay, well, we're going to get 50,000 signups, and then every quarter we're going to get 50,000 more, and we can match that demand, great. But if you take that wait list and bring it up to 3 million or 1 million up to 3, like whatever the number is, adding 50,000 never changed. But the demand changing makes it sound like they're falling behind, and people are putting out these reports saying, oh, they're doing this on purpose and stuff like this to keep people interested in the ecosystem. Bull crap. What if it went to 10 million? They still can only put out their expected 50,000 or 100,000 per quarter. You guys changed the outcome, not Robinhood, right? Mm-hmm. So that's important to understand as well. And if I could also add, like, there was I think it was one of the Grand Theft Auto, like GTA games. They said if we were to put out an old or a broken game, everyone would remember that.
Yeah.
You know, and maybe we would never be able to repair our reputation. But if you delay a game and don't put it out on time, no one remembers that. And so, like Roy said, the second people get it, all the problems go away as long as it's not broken. So let them perfect.
And the app is really good, like really good. The only part that's not is the travel stuff, but that's whitelisted, white labeled.
Yeah.
I've even seen Chris Patel. I don't know if he's become addicted yet or not, but doing the mystery boxes like left and right. And it just, the virtual cards, the setup, the breakdown of card holders, like we have 4 credit cards, which we only use 1 now. But the apps are all garbage. And then Robinhood's is, I wouldn't say fun to use because it's a credit card app, but it's nice to use. It's easy. It's slick. I love it.
I'm going to show everybody what it looks like. So this is my redeem points for cash back. I'm going to slide it all the way to the top. So I have 393 points, 393. I do this basically every couple days. I press redeem and then boom, $3.93 enters into my brokerage. And that experience every time is just incredible because, again, it's hard to get 3% cash back. The other thing I find ironic about all this is the same people that say Robinhood's the most unethical company scamming their users, yada, yada. Now they're trying to be safe and sophisticated with rolling out a product that, as Tanner says, has very high delinquency rates. They're trying to get it correct. And everyone's like, oh, what's a scam? It's like, you're not entitled to the card. This is a product that the company decides to give out whenever. And obviously I would want them to ramp it up faster as well, but everyone's acting entitled. And at the same time, everyone's saying Robinhood is a messy company that moves way too fast. It's like, you can't have both.
Hilarious. Yeah. Complete double standard, eh? All these rushed products and now the one's not rushed. And then I'm sorry, but it's a lot of the SoFi bulls and everything that are saying they're keeping them in the ecosystem for nefarious reasons or something like this. You don't even have to. You could sign up for the wait list and not even be a gold member.
Yeah.
Like it doesn't even fit into what people are saying.
How many credit cards has SoFi issued?
I could get you that number. Give me a sec.
It's got to be like $100,000 or more than that.
No, yeah, it is. It's more than Robinhood still, but Robinhood will surpass them.
They issued the unit economics just didn't work. Like that program was a drain on SoFi on the it's not the best side financial services platform. But they have new cards that they're issuing out. But I think that they're going slower. Like things can end very badly when you do a credit card wrong. When you handle it wrong.
So just to put this into perspective, we can read out or SoFi's credit card new offerings. Back in Q1 of 2022, they put out 26,000 new cards, then 22,000, then 14,000, then 17,000, 21, 20,000, 22,000. But they were ramping up such losses, and this was a bad product. So because and that's not even fast considering how fast Robinhood's rolling it out. Then they went down to 9,000, 9,000, 5,000, 4,000 in each quarter. 4,000 new people. Imagine if Robinhood was doing that. People
Wait, hold on. Why are they losing money on this card? Is it because of delinquencies or
delinquencies? Yeah. That's why I'm saying Robinhood really could mess up with this card because there's lots of money to be lost, and even a company that all they do is loans can get it wrong. Now, it's getting really good now, so you're starting to see the ramp up again. So it went from 4,000 to 14,000 to 27,000 now. That was the most recent quarter, was 27,000, which was the highest they've ever seen. But 27,000 pales in comparison to what Robinhood is doing a quarter. SoFi is now at 306,000 cards, which is probably what Robinhood's coming up on right now.
Yeah.
But that's also could be a problem. Like,
yeah, this is where really we'll start to figure out what the delinquency is. Some people read into the SEC filing as far as the help me out with the word, Tanner, the amount that they put there as a provision
credit loss allowance.
Thank you, credit loss allowance, and that was relatively high, but that's including X1 cards, which was their what they bought out initially, and so there's more to it than just the gold credit cards. We'll have to keep an eye on it and see. Vlad said something, though, that was very interesting with this. He said they're not just trying to do this as a loss leader, but actually a profitable product, which is it's a challenge. And you have to walk a fine line and do things well, and also hope that macro doesn't fall apart, frankly. But I don't know if he pulls it off. I hate to doubt Vlad, but I really, like I've said this on X before, like if Vlad is able to pull it off and on a consistent basis, this is actually a profitable card for them as a standalone product. I think the phrase might go from "don't bet against Elon" to "don't bet against Vlad," because it is so hard to do with this kind of rewards.
And to add to that, he did write out because Vlad replied to Data Driven Investing about the credit card loss statement, which I think was at like 12.7%, which is really high.
Yeah.
And he said, yeah, but that also includes X1. But if I'm not mistaken, the company or the leader that ran X1 is now running Robinhood credit card. So, there still could be problems, but also they will adjust, they will correct, they will lower the spending limits on the people who are defaulting and issue more to the people who are doing fine. There can be periods in credit card histories where they do start to issue less cards. I mean, we saw it in SoFi, we could see it in Robinhood, but also it's not their only business. They're not a credit card business. So it's fine. People who deserve the card will get it eventually. Unfortunately, it's the most in-demand financial services product that's ever been seen.
So can I ask? Oh, go ahead, Amit.
I was going to say, last question on this. Do you think part of the reason Robinhood is going to be more successful with this than other companies is because their marketing cost is zero, essentially?
Yes.
And in your experience in analyzing like Amex, et cetera, they spend a lot on
about half.
Wow.
Yeah.
So that's why you think they can actually get away with 3%.
These are not my words. This is what Vlad, if we go back to like one of the conversations that I had with Vlad, the one where I did at the summit, these were his words. He said about half spend on customer acquisition. And, without that, we're going to make a fortune. So, yeah. Now, I think the thing is that like they could be profitable without it, but also they don't even really need to be. And if they are, it'll be a marginal profitability or something like this. It's not going to be some big bang product for them because that 3%, like credit cards can be, but 3% digs into a lot of that.
Yeah.
That's why no one else does it. There's not these are some of the biggest products for JP Morgan, Wells Fargo, Citi, US Bank. Like all these companies rely heavily on the consumer side for credit cards. None of them offer this level of cash back, and there's a reason for that.
It seems like a pure ecosystem play. Seems like you get into the thing and then boom, you get upsold on a variety of different products.
Yeah, and that's why I'm fine with it being a small loss leader. Like it's not a creative individually, but it adds to the flywheel. Good with that. Costco chicken is the analogy there, but it could be a lot worse. If it is actually a creative, like that's just frankly amazing. But it's not going to be like a massive. It'll be in the other revenue.
Well,
I mean, we've seen like the breakdown in revenue for the credit card. It's small.
What's also funny with Robinhood is like you could say that there was a reason why they weren't doing commission-free equities or free options or something like this. You could compare them to all these businesses, but Robinhood has this genius way of lowering the margins to a level where no other company thinks that it's possible, and then they bring in a massive market share.
Yeah.
So
vertical integration. I mean, it's hard on the front end, but if you're able to pull it off and you're able to scale, like people just cannot compete on a 1-for-1 basis. They have to figure out something else.
Robinhood benefits from economies of scale, and they're at the start of that journey.
Yeah.
I spoke today about how competing with US markets is hard, and yet Robinhood makes it look easy. International markets is going to be like taking candy from a baby. I mean, it's going to be incredibly easy because international markets don't even know what free option or free equity purchases is. They have no idea what that is. So yeah, it's just going to be wild.
And I agree with you. We do have to keep in mind, though, in some places like the UK, they have outlawed payment for order flow. But we do. I don't think that's going to hold it back. What's holding them back right now in the UK is they just don't have the ISOs and the SIPs. Once they have that, it's off to the races. And the competition, like in some places, it's better than others. But as a financial product competing in the United States, like that's the most cutthroat market. everybody's here. Everybody's going after this market aggressively, just because we're wealthy. And then Canada, sorry.
Yeah, another payment for order flow fail over here as well. We have it banned.
So a question for you guys. We are not that far away from an all-time high. Do you think that we get it? When do you think that we get it?
Say that again?
$85 is the all-time high for Robinhood in the pre-market shortly after IPO. So we're close to that all-time high. I'm just kind of curious, when do you guys think that we get it?
So
this year. I don't know when.
Like, do you think we're talking about weeks, months, or sometime this year? We'll put it that way.
Months.
I think there's some obvious catalyst that could get us to forget 85. It could be triple digits by the end of the year. And it's number one is this crypto event. How crazy does the market perceive it to be based on whatever they announce? Number two, tomorrow they're having a live demo product event, which I'll be streaming on YouTube, and that could be something very exciting as well. I feel like it's legend updates. I could be wrong, but feels like that's what it's going to look like. You got something, Tanner, there or no?
No, I agree.
And then third is I think growth's going to be upwards of 40% for the rest of the year. I mean, based on my preliminary Q2 updates, based on the main metrics, we're growing at 45%, 40 to 45. And then Q3 is going to be a little tough because August always tends to suck along with September. So they've got to be really innovative just to get more deposits, etc. I mean, it usually those don't go well, but they're going to have relatively easy comps, 637 million. So I feel like if they can get anywhere near 850, that'd be amazing. And then Q4, if we have a Santa Claus rally, we're growing again at 40%. So the question then just becomes, if they're growing at 40%, with probably another event in October, the Hood Summit, again, like more and more products, credit cards gonna be ramping, all these different things, gold subscribers,
crazy,
probably gonna have close to 3.8 million by the end of the year. I don't see how the street fades that unless they think 2026 is going to be a bad year for the markets and they kind of price that in ahead of time, along with Bitcoin, which you get to 150, which could be your catalyst, or at least 125-ish. I think triple digits is on the roadmap. The question is, can we sustain triple digits? And this is always like the reason a lot of these SaaS stocks can sustain their multiples is because they have reoccurring revenue. And all they need to grow is that top line, but they have this revenue baked in. Robinhood does not have reoccurring revenue outside of gold subscriptions. Like if the market sucks, trading volumes will go down. And if interest rates come down, that's actually not going to be the best for Hood because they're not going unless it increases transaction volumes. So I think they can get there. I don't know if they can hold it towards the end of the year.
Yeah, it'll be volatile, but I don't know. Like I think that we could, if macro doesn't fall to pieces, and it could with the geopolitical stuff that's out there. I know today we just kind of shrugged it off and went on, but with the crypto events they're launching, tends to be a little bit of a run that happens after that. I'm not betting on the run. I'm not doing anything different on the run other than just being a little bit careful that week with covered calls. But I think if macro is stable, we might be looking at all-time high in weeks, not months. But this is a stock that like a month and a half, 2 months ago, it was like in the high 20s because of macro. And it's very, very volatile depending on the macro. So like we could easily see like a blow off the top type rally, especially if Bitcoin is doing the same, triple digits, and then something happens, not to Robinhood specific. We see Robinhood in the 50s. So
I'm just not seeing the catalyst in the short term, though.
For downside or for upside?
Upside. Like, I mean, Bitcoin. We're not getting a rate cut. We're not getting, maybe we get a de-escalation. Maybe that is helpful, but it doesn't look like that right now.
So what was the catalyst for 5.72% up today?
Well, I think that people thought that there was de-escalation. I thought that there was potential deals being made and Iran was pounding the table that they said, hey, you know what?
But why does that mean Robinhood should be up 6%?
Because there just generally a lot of trading, I guess. But I don't think that it one-to-one means that Robinhood should be up a bunch, but I think that people got excited. But I don't see how that's going to continue to just happen over and over and over till we get triple digits.
Well, I mean, we're not that far away from triple digits, especially with the stock as volatile as Robinhood. It could be 2 pretty good weeks, and then we're there. So I'm not betting on it again. I'm not saying like this is for sure going to happen, but it doesn't take much as long as the macro is good in a bull market for Robinhood to do well. But like the real catalyst is a crypto event. Another catalyst is also if crypto really starts running again. Bitcoin has just kind of been in a trading in a groove for a little while, but that could pick up. You never know with Bitcoin. Like I'm seeing a lot of, and it seems like there's a new one every single week that are following the MicroStrategy route. And the more and more participants that do that, the more upside pressure there is on Bitcoin's price. I still do think that we get into a crypto winter at some point. It may be delayed with some of the things that I'm seeing until next year. That's a great thing for Robinhood. But if that's the case, I don't think that we've hit the all-time high or the local high for Bitcoin yet. I think that there's a lot more appreciation to go. Usually there's a blow off the top moment. And that quarter is going to be absolutely sick for Robinhood. That will be a triple-digit Robinhood, and that could be next quarter.
And to be honest, it's not even a catalyst, which is sad. Like Dan Dolev ran the numbers on it, and from ages like I think it's 25 to 65, the trading age, based on the GDP that we actually bring and everything. I think Dan Dolev's team ran that over an entire year to add about 9% to Robinhood's revenue if they captured like 25% of the entire market of the 25 to 68 age range. Like, we're incredibly small, which to be honest is why no one comes here too.
Dude, Tanner, tell me if I'm wrong. When you hear Alberta, okay, do you not think of a grandma?
That's the first time I've ever heard that.
Dude, tell me you don't hear Alberta. G7's happening in Alberta right now, and you don't think abuelita.
No.
Abuela?
I've never thought that, but that's funny.
And Alberta just sounds like a grandma name. Like, hi, Grandma Alberta.
Yeah, but you guys got funny names for states too. I mean, we all do.
But why is it called Alberta?
I don't know. Why is it called Ontario? I don't know.
Albert is in the royal line. I don't know if there's an Alberta, but
I'm sure it goes back to some sort of British thing, but
I don't even know why we call it New Jersey, bro. I have no clue. So
there's an old Jersey. There's Jersey. Yeah. It's
okay, there you go.
I don't know it's not a county. That's a wrong name, but whatever that is in Britain, there's a Jersey.
Okay. So all of us think Hood. I mean, I think we all think it can hit 85. It was at 80 on the S&P inclusion. Oh, that's the catalyst. S&P inclusion. That'll get us there.
Yeah, but that I don't think will come in. That's why I said months. I do think that S&P inclusion, new quarters, but we're not going to get the next quarter for 6 more weeks. So like, I do think any of those things could really make it pop, but I think the market will probably want to see something like that.
Yeah.
Like someone said, oh, you need a catalyst. They're growing 50% year over year. It's like, guys, that's what markets do. Like, yeah, you have to realize there's a multiple on earnings. Okay. So people model that out already.
Yeah.
Like, I don't know.
And Robinhood's been
on a short term.
I was going to say Robinhood's been given a pretty good multiple.
Yeah. Yes.
Yeah. Yeah. I was talking about how ridiculous the multiple was, when it was like $40, $30, and it was falling. I'm like, this is ridiculous. This is stupid. It's a great opportunity. And I wish I could buy. And I was prohibited. I couldn't. But now I'm not complaining about the multiple at all. But in the short term, stocks are very narrative driven. Very. Whether it makes sense as far as fundamentals or not, it depends on the ticker. There's some that are more so than others. Like Tesla is certainly one of those that does not trade based on fundamentals. Palantir, honestly, at this point is the same thing. And so if that narrative takes a hit, it falls. And if the narrative is going great, it rises. The narrative definitely does have a bigger influence on a name like Robinhood than, like IBKR or something like that.
I get it. I'm talking to 2 Palantir bulls right now, but valuation does mean something. Okay.
Oh, it does.
Whenever a company grows 50% year over year, and on the other side, their stock in the same year grows 240%, that cannot be repeated indefinitely just because one company has done that. Okay.
So somebody's mad at selling in
unless you're Nvidia.
No, Nvidia is cheap.
Nvidia went through phenomenal, ridiculous growth. It's still growing massively, but if you look at the stock, it's like almost flat year over year. I think it's up a little bit now. But I was looking at
2023, it went up so much.
Yeah, and it's growing faster than any other company that we can name other than like CoreWeave.
And that will, barring something really strange, happen to Palantir at some point. It may not happen this year. It may not happen next year. But I don't think that bears are going to be right at all where like Palantir is going to fall like to 35 or something. Because, I mean, even Tanner would be buying it up at 35. But and I don't mean that as an insult. I'm just saying, like, that there's an opportunity. Like when everybody has a number.
As an insult until you said it's not an insult, and then I was like,
well, I'm just saying, like, people that have problems with Palantir, it's not based on the company and what they're doing. It's based on valuation. And so when you see it fall, even if you look at the multiple at 35, it's still like, well, it's not like cheap. You would perceive it that way just because of what they're doing, how fast they're growing, and that really ridiculously deep moat. But the likelihood is, at some point Palantir it kind of stabilizes. That perhaps it doesn't fall. It falls some, maybe to $100, and it just stays flat for a year or two, and it'll still be expensive then. Still be a great company to hold, but with potentially making this Tesla purchase, some of the profits that'll offset some of that new debt that we're taking on to knock out some of the old debt will be from Palantir. So
for real, can we talk about Palantir for a sec? Palantir and Circle.
So I was going to go to Circle, but yeah, we can do Palantir.
There was a deal that I saw today for artificial intelligence tools, 200 million. Okay, if Chad's here, I'll switch the topic. I'm kidding.
Get him, Chad.
No, now Chad, let's see what he has to say about Palantir. Go for it.
No, I'm here to learn. I'm not here to bash. I'm here to learn.
No, don't be scared because Chad's here.
For a deal that OpenAI just did with the Department of Defense for like $200 million, what does that look like from a Palantir investor perspective?
I think this is very simple. So everyone sees this and they're like, oh, Palantir is losing contracts to the DoD because of OpenAI, etc. There's a very simple way to analyze this. The DoD cannot give Palantir a contract for everything. They just can't. You cannot have one vendor. It's a
kind of price like they're going to get everything, though, right?
They're priced for a variety of different things. But is it bearish for them to lose a contract that I don't even know if they were bidding for because we don't have any details on the contract to OpenAI? No, because there's no way in hell the DoD gives everything to Palantir. It's just not going to happen. And they've already gotten a lot of contracts in the past couple months. So I think this is just the DoD diversifying. And there might be some specific things they asked OpenAI to do that maybe Palantir can that are rooted in foundation models. I don't really know yet, but I don't think it's net bearish for Palantir.
And one of the things, I don't think it applies in this case to OpenAI, but I'd have to look into that. That's genius about Palantir is they back in the day, have you heard that they sued the U.S. Army?
Who, Palantir?
Yeah.
No.
Yeah, this is back in years ago,
I believe. I think 20.
Anyway, they ended up the way that the United States government would go after some of these contracts is they usually would not even they go through a bidding process, but they would just say, we're just going to build it ourselves and not actually look and see if they could do it on a 1-for-1 basis. And so Palantir sued the Army, won successfully, got the contract, and it actually was the impetus that was needed to begin to change the way that this bidding and contract process worked with the United States government. Now, one of those features that Palantir is involved in, they're not the only ones, is what is called, and I might have it backwards, FedStart. No, it's FedRAMP. And Palantir has an offer on that. So FedRAMP is basically, you have to go through all these security clearance layers to be able to sell to certain vendors within the government, depending on who it is. And rather than apply for each and every one of these layers individually, which can take a long time, administration takes a long time too. Instead, they're like, hey, why don't we do something that's called FedRAMP or Start? I can't remember which is which. FedStart. So that basically you can piggyback on somebody else's IL certification just at a lower tier typically. And so Palantir is one of those basically sponsoring agents. Now, there's more to it than that. There's technology involved as well. But in essence, they've been able to monetize some of their competition that competes in a certain niche here and there just because they're like, hey, go ahead and piggyback on our IL6 certification, sell to the government, sell these contracts, and Palantir gets a part of that. So like you don't know, you wouldn't know the individuals, but like ID.me is one of those.
By the way, this is we can watch this for 2 minutes. This is Karp just talking about the whole suing the government thing.
Eventually, we had to sue them. And by the way, the golden rule of working with the U.S. government is thou shalt not never sue the U.S. government. So and then the most famous, I won't mention their names, but literally the most famous people in government came into my office and they were like, if you sue the U.S. government, everyone will find out you're an asshole and you'll never work there again. And first of all, I didn't really view myself that way, but it's nice to see how I was viewed. And then I told them, but if we don't change procurement, we're going to be selling like 1940s technology to the DoD for the next 50 years, and America's going to be in a terrible place. So then, we sued the U.S. government, and you of course you never win, but we won. And
and they changed software procurement, forever. Tanner, don't you want to invest in a guy like that? How do you see that? How do you see that and say you don't want to invest in it? Like,
I love it. I think
you got a CEO that can talk, is charismatic, can get people to listen, laugh, get his multiple to 100 times sales. How do you not invest in that? I bought more shares today. I bought more shares at 140 today. I bought 8 shares this morning.
Did you really?
I did. I had an uneven number of shares. I said, you know what, let's round it out. 8 shares. So how do you not buy it, Tanner?
I just I don't like overpaying for companies. I think those things can draw back, and we've been in a pretty significant bull run right now that people can easily think that this is just going like the craziness, the irrational market will just bring it to 150 and 160. And if you ask people, they think that Palantir will go to 180 now. It's completely plausible. But if we
look, if it goes to 120, that's the dip, which is crazy, right? Like if Robinhood goes to 60, people would say that's still expensive, but that's the dip. I'd buy that dip.
I still remember when SoFi and Palantir were trading much, much lower. I think Palantir had just broken out of single digits. SoFi was like $5 or something. And we talked about which of these would be the next 5X. And I put out this ridiculous scenario at the time where I'm like, I think it was $8 at the time. And I said, well, it can get 40, I think, within 2 years. And people were like, that's ridiculous. That's, of course it did. This was like, I think 4 years was May last year. And so it outperformed that. And I looked bearish, frankly, with that price target. But that's a lot of it is just execution, but also catching this massive AI wave, which is part of the thesis that I had there at the time. But I mean, like the stock, it can do anything from here. It can, but at some point, Tanner's right. Like valuation does matter. There is a price to pay that's too much. And like, frankly, myself, like 8 shares for you, Amit, yeah, no big deal. But I'm not buying any Palantir here. I've got a lot of it anyway. But even if I had no Palantir, I would not feel comfortable dollar cost averaging here. I would look for a dip. It could get back under triple digits. And if I didn't own any at all there, I'd be like, all right, let me start DCAing and just be careful.
For real, anytime you try to make any sort of market comparison to Palantir, people say that, you can't look at it with comparables. It's a one of one. But even the most expensive companies where people think that these companies can do no wrong, and to be honest, the trade desk was one of those businesses. People forget how high their multiple was. It was really high. Not even as high as Palantir, but still high.
Yeah.
And they made a slight mistake, guiding too high on their revenue, and they missed it by that much. And the company got cut by 2/3. Like, Palantir will be that.
But I think part of that too is just folks were seeing that there are some changes potentially with advertising. We've talked about the technology, behind that. And so I think that part of the premium with the trade desk was they're like, hey, they have this inassailable moat. And then there's vulnerabilities that are not even specific to the trade desk, just industry wide. There's question marks. And so I think that at that point, the market sold it off a lot more so than the guidance thing. The guidance was a catalyst, but I don't think it would have gotten nearly as low otherwise. And so, like, can that happen to Palantir? Perhaps. Like, there could be a shift in narrative where they miss some expectations, and expectations are like it's priced for perfection right now. And we see a pullback. And if it comes at the same point where I can't even think of what this is just because they're so well positioned, but they're like, hey, this moat is not very vulnerable, but is not inassailable. Just even that can cause it to dip quite a bit. But
yeah, I would never bet against a company like this. But I would just be careful about buying 8 more shares right here.
Yeah, like the crazy thing to me, well, it's not heavily shorted, but there are people out there that have bought puts that not for protection, but just downside bet, and maybe they'll make money. And there are some that shorting it, or have at least talked about that publicly. And it's crazy to me. Like I would never, I don't short, but if I did, I would never short just based on valuation. It needs to be based on a weakness because extreme valuation can remain irrational for a long time. Like,
Forever.
yeah, longer than you can remain solvent. There's a famous quote around that.
Yeah.
Right. Okay, let's talk about Circle and stablecoins. JP Morgan put out something today. It looks like they may be going for a stablecoin. Circle stock has been absolutely incredible. This thing is up 500% since the IPO. I did not get an allocation, unfortunately. I know some of our audience did, and one of my followers today, they messaged me that they sold like 100 shares today at 150 or whatever, and they got it at 30, which is incredible. And then JP Morgan, again, there was this thing they filed from a patent perspective, JPMD, which looks like an entire kind of crypto ecosystem of products, not just a stable coin. So I guess the broader question here is, what do we think about stable coins right now? What does this mean for Robinhood? And is this the big threat to Visa and MasterCard out there in the world?
You want to start, Tanner? Or I can.
Sure. It's definitely a threat to Visa and MasterCard. But I don't get Circle. I've just put out a report, or a report is the most jargony thing I could have ever said. I put out a tweet. Jeez. Anyway, just saying.
No,
hey,
your tweets are equity reports. That's what.
Yeah.
So.
I said, can anyone explain to me what differentiates Circle from any of the other stablecoins? It's just crickets across the board. And so, like, to me, the problem will be, is this the largest commodity we've ever seen? And I really do think it will be. Walmart, Amazon, JP Morgan, every single big bank. SoFi talked about doing their own. You have all others like Tether and all these other companies that are competing one-to-one with these businesses. I understand that Circle has a place in this market. I don't think that they should be zero. But to say that the equity researchers got this so wrong that this company needs to 6x from where it was is crazy. That's crazy to me. Stablecoins will be huge, but there's nothing that says, in my opinion, that Circle will be the dominant force. The only reason, in my opinion, I could be wrong, that Coinbase chose them is because the revenue split between Coinbase and Circle is very generous to Coinbase, extremely generous.
It is.
So I'm not too excited about Circle at all. I'm super excited about stablecoins, but I don't see how one wins over the other.
So the one thing that held Circle here, where it does differentiate them, not as far as technology. So they're US based. Tether is not. Tether is not as compliant, and there's been a lot of issues with Tether through the years. I think they've gotten a little bit better, but they're still not. Like, they're still sketchy. I would love to see Circle replace their market share. It's a commodity. So commodities, the way that they win is by scale. And Circle has that. They have the trust and they have scale too. So should they be trading at this price? Absolutely not. What I think happened is, we were talking about the year of stablecoin like 9 months ago, 12 months ago, like that this next year would be really big. And didn't realize how big with President Trump and the SEC and making changes there. But it just got more and more clear as we entered into this year. And I think a lot of market participants and analysts were just like, stablecoin, it's always going to be like the same. Why would anybody be interested in that? And there is a play here. And Tanner is right that I think Visa and MasterCard, even though they are looking into stablecoins or working with stablecoins, it's that interchange fee that's the largest part of the transaction cost. It's not, stablecoins are actually not necessarily cheaper, going through the acquirer and that whole process. But the challenge there is with that interchange fee. Now, there's some issues with stablecoins as far as it relates to massive adoption. So one is, as far as the JP Morgan Chase, this might actually be a multi-bank stablecoin that's used on the back end. They've talked about that in the past. I don't think that JP Morgan Chase needs to do that, but they might see the benefit of having one of the largest USD stablecoins out there. but they cannot offer yield on that. Well, no, banks can. I'm incorrect. Banks can, but we saw Walmart, we saw Amazon talk about stablecoin. They cannot offer yield on the product. So there's not many yielding stablecoins. It's one of the things that Vlad talked about as well. But that's not like the biggest thing for the stablecoin. Like the challenge for Circle is 98%. I think it might actually be a little bit higher of their revenue comes just from the treasury yield. These are 3-month treasury products, which can change quite rapidly depending on the environment. And so it's going to change on a couple of things. I think that we will, hopefully we'll see the United States government be a little bit more responsible. It doesn't impact the 3-month as much.
And again, real quick, Roy, before you continue, the reason they get that majority yield from treasuries is because the customers using Circle forego their interest on the spread, right?
Yeah, so they have to back on a 1-for-1 basis the amount, the dollar amount. So if you have $10 billion worth of stablecoin, you have to back and Tether. There's rumors out there. Like I don't trust Tether myself. There's some sketchy things, but Circle backs it on a 1-for-1 basis, and so most of that has to be backed through. There's a couple of options, but it can't just be cash, and it's through the 3-month treasury. Short term, it can't be like a long-term 10-year or anything like that. And so if that rate changes, they have a problem. And so even if stablecoin, and this is your stablecoin, we're going to see a lot more acceptance. I think Circle is going to be one of the big winners. But if we see a 50 basis point cut, or we see any kind of pressure as far as on the 3-month, that could cause a big issue for that. The other factor is the more interested parties there are in stablecoin, the more pressure, buying pressure there is on the 3-month yield treasuries. And as a result, the yield goes down just naturally. And so that's a bit of a problem. Now, the one thing that I absolutely love as an American about this, though, Amit, and I don't know, like as far as ramifications for investing, it's great for us, is, we have the global dollar, the petrodollar. And a lot of people looked at crypto when it was nascent, and they were like, hey, this is going to be something that actually takes that away from the United States, that crypto will replace the dollar as a reserve currency. But this is actually going to perpetuate it, just because if you look at stablecoins, it can be backed by anything. Like you can even have a Costco coin that's backed by a hot dog value mill. Like you can. But almost every single stablecoin is backed by United States dollars. And this is going to perpetuate for a very, very long time the United States dollar as a global reserve currency. It's a great thing for our country. This is going to be built out. It's a good thing for consumers as well. And the tech is just frankly better than the old rails. But it's not like Circle's trading at like even more ridiculous levels than Palantir, frankly.
Someone said Kirkland coin, but like for real, that could be a thing.
Yeah.
So
they should do it.
Does this affect Hood at all, the stablecoin stuff?
Yes. Yeah, USDG is what they have. And let me show you this. I actually pulled this up in preparation. This is from the SEC filing, the most recent one in the quarter. Let me zoom it out a little bit. Oh, no, I lost it. Let me zoom it back out. Okay, give me.
By the way, NVIDIA bought 128,000, or Kathy bought 128,000 shares of NVIDIA today, for those that were wondering.
Love it.
Yo, Canner, did you see UBS? UBS says 280 by next year.
Crazy. I read the whole report. Nuts.
So here's what Hood has on their balance sheet. Now, there's a breakdown of this in the 10K, and it's not all USDG. There's a lot of Circle, and there's a little bit of some other stablecoins. But they have $361 million worth of stablecoins on their balance sheet. Again, these have to be backed by treasuries. You do see treasury securities there. But it's interesting to me. It tells me that at this crypto event that they're doing something with stablecoin. It's not just like, hey, we like to have 361 million for some reason. USDG, they partnered with a number of others. It's a very small part of the stablecoin thing. Give me a moment and I'll pull up the market cap stuff too.
I dare you to say after all this, Amit, that you don't understand stablecoins. Say it.
No, I get it. It's a coin that's stable. I understand.
Yeah. So like one of the big things for consumers that's really nice is it's instant settlement. It's also trackable. It's programmable. And it is slightly cheaper depending on the network. But if you have to convert it from dollar to stablecoin and then back to dollar, you kind of lose that, except for bypassing the interchange fee. The challenge for stablecoins too is compliance. So you have to make sure that you're not bypassing, for instance, when there's sanctions against a country, you'll get into massive trouble. A network will also get into massive trouble potentially if they're being used in an abusive way like that. Companies that are issuing their own stablecoin, this is why I think Walmart and Amazon probably don't do this, is we've seen a lot of scrutiny with just things like Zelle or Cash App when there's a lot of fraud that's rampant and they don't have some sort of consumer protection. These are not natively built into stablecoins. Like, how do you handle refunds? How do you handle when the customer says that this didn't happen or the merchant does? And also, as far as it relates to commerce, like, you need to know your customer. You need to know that they're a real customer. You need to know the merchant is a real merchant. And they don't handle that natively. It's not that these are insurmountable, but there are challenges to the system. But you can see this is a market cap for stablecoins and just how much it's grown. There's plenty of room for it to grow as well. But yeah, the breakdown here. Let's see, where is?
There's a couple good questions in the chat as well that I want to cover after.
It's mostly Tether dominance. There's a tab for it. I'm not finding it right now. But I mean, there's a lot of players here. Like PayUSD hit $1 billion as far as market cap, but that's tiny.
Wait, so are you saying when my girl's on her period and she's having mood swings, I can give her some stablecoin and she can get more stable?
This is going to help people understand it better.
Right.
For real though, like think about it. Like, okay, so there's a couple questions in here before I don't want to go back into what we did last episode, but Phil Harmonic said 98% of Circle's revenue comes from interest on treasuries. Fed rate cuts will hurt that. No, yes, it will. Another reason to say why it absolutely freaking sucks. Next, Bad says stable, but it can be depegged. That's true. But the market caps have gotten so large that it'd be so incredibly hard to pull that off, especially on a Tether or a Circle. It might actually bode well for them in that case.
Yeah.
Tanner, could a stablecoin get hacked ever or no?
No,
Okay.
not without quantum, baby. But so stablecoins are just blockchain. So I forget what the security thing is. The something 256. I forget what it's called.
It depends on the network they're on. So throw
Right.
us back up a bit.
Most are on Ethereum or Solana.
This is PEG. Basically, can it move away from just a flat dollar? It can, but it's very little. It's very unlikely, especially with the larger stablecoins. If you go way down here, then you can see some movement there.
Yeah.
So, but those are small market caps. Now, these are the chains right here. So Tether is actually offered on 91 chains. Most stablecoin prior to really like the last year has been just on Web3 applications, just crypto, trading in and out of crypto. There are actually some tax ramifications for doing it that way, at least here in the United States, which is one of the reasons why people do that.
Can we simplify this for the Emits of the chat, including Emit?
Please,
Yeah.
please do.
So like for real, Emit, whenever you think of like an ETF, okay, an ETF, you're not actually necessarily directly buying all those companies. You're
Right.
giving the money to a company, and that company is going to go out and buy all those companies. Okay.
Right.
So you're giving this stablecoin company, Circle, Tether, whatever, your money, and they're going to go and buy dollars with it. That's what's keeping it stable. Okay. So they're just what you're essentially buying is a 1-to-1 to US dollars.
Mhm.
And
That's
the
why it's
reason
not
I'm doing it is for the instant settlement of the stablecoin.
Yeah, in the States, it really doesn't make any sense to buy a stablecoin for the most part. What it's really useful for, like the immediate benefits, is like a Venezuelan who wants to buy US dollars. They can't go to their bank and get US dollars. You have to buy it. Well, I mean, they could potentially, but like you'd get, hit on fees and then on interchange or on, the spreads and everything. If you actually go and say, hey, I've got money on this digital wallet and I can buy a stable coin, you can have access to an essential US dollar and avoid the fluctuations of your crazy currency that your government has put you through, like the Venezuelan bolivar or whatever.
This feels super bullish for A, treasury demand, but B, USD maintaining its reserve currency status.
Yes, because the international folks have not had any way of getting US dollars at the rate that they can with stablecoins now. So the boom, the Tethers of the world, for example, Tether USDT, if Roy brings it back up, what's the market cap of that?
Let me throw it back up here and I'll click on just Tether itself. Yeah, 156 billion.
Now go back to the list that you had.
Okay.
156 billion. Can you go back to the list of all the stable coins?
Yeah.
Now scroll down. Almost all of these are international, especially Tether. The only real thick US one is Circle. So all this demand, 156 billion, everything is all international dollars for the most part. These are people trying to get access to US dollars.
So why does this screw over Visa?
Because interchange fees.
If you can say to one person, hey, I want to buy your service, but I could send you a PayPal or something like this, but they're going to charge us 4%. What if I just send you a USDC via blockchain? Like you have my address, I have yours. That's how the blockchain works, right? You can send money to other people. You don't need to talk to Visa or MasterCard or anyone, and the fees will be nearly non-existent if you're on a chain like Solana.
So throw up this real quick. This is from, by the way, an article I have it in my video that's on Stablecoin and Circle. Simon Taylor, stablecoins are cheaper, they're better. Really well done. Breaks down, by the way, network fees, which is really cheap, but it's also cheap on traditional rails. But merchants pay a lot more. And that really goes down to this. Like, this is a hypothetical diagram. But let's say that you walk into a store, you buy something with your Robinhood Gold card for $100. So that doesn't go directly to the merchant, but instead that $100 charge goes through this process here. So you have, of course, the issuer taking the biggest amount. That's the Visa, that's the American Express. They also take 15 cents here. That's for their rail itself, but the card issuer here. The merchant acquirer takes a small amount, and the payment service provider gets this amount. They keep a little bit as well, but you see that they pay the merchant then $96.80 instead of that full $100. So, like, if you can remove the issuer, there are some challenges with that, because the issuer does a really good job of, for instance, like checking out me and saying, okay, does this person deserve to have this card, or is there problems with his credit? And so they filter that. This is not natively filtered by stable coins or companies. So there's some challenges, but if you can remove or bypass, or even like in the case of Walmart and Amazon, where they're talking about stablecoin, they can perhaps go to the issuers, go to Visa and say, hey, we'd like a lower charge on this. And that's really good for them because they have so much volume.
So when is Hood launching Hood stablecoin?
USDG. I mean, I think that's as far as I go. I think a lot of these companies also will launch through like Paxos, perhaps, where they're
so that's a really good, like, this is also why I think Circle is going to die. Is one of the comments that you made, Amit, was that one of the benefits to Circle is that they get to keep all the treasury interest, and the user doesn't get anything.
Yeah,
but that's not necessarily true. So Coinbase, for example, like what we saw with Coinbase One Basic, they'll pay you 4.5% APY,
right? Because
they can offer you that if they know that they're going to get the treasury income somewhere else. Okay. Now, what the global dollar network is Circle has such an advantage because they're already the current market player. They've been there for a decade. Go ahead and share this. So in order to gain market share, another company has to give up margin. And Paxos thought of this idea to get all the big names here, and say, hey, instead of one company owning all of the interest, USDG is going to split it to the partners that they're partnering with. Okay. So these three dots up here is like this is what Circle makes, 100% of the interest. But Paxos is saying, hey, we're just going to take 3%. Our network partners, the companies that are bringing us the actual lead, will get 97%. That is how companies like Robinhood, for example, are going to offer a stablecoin, because they're still going to make a very, very large cut, and Paxos will kind of try to make themselves the Visa of the new world.
So when rates go down, how is this good for Circle?
It's not.
So then why the hell is it trading at 30 billion?
Brother.
Narrative. People understand.
But what narrative? What, like,
well, okay, so how many companies are there out there that you can invest directly into stablecoin for? Not as a proxy, not as a piece of it like PayPal. There's one. And people are just waking up, not fully understanding it, not seeing where the challenges are. They're like 6 months behind where we're at. And they're like, oh man, stablecoin, it's the next big thing. They're kind of right, but there's a lot of competition. There's a lot of challenges. And the biggest thing that really hinders Circle is like that revenue share agreement, which made sense because it helped them scale. But it's like half of their revenue is owned by Coinbase. So it handicaps them very much so. And it's a commodity, like they'll do well. I do hope and I do think that they'll be able to overtake Tether over time. It's going to take some time, but maybe in the next couple of years. But it does not deserve to be trading where it's at. Now, that doesn't mean you can't make a ton of money trading it, but like long-term holding it at this price, unless I think that there are some people out there that do see like potential future products that don't exist, that haven't been talked about, diversifying away from this interest revenue, which is 98%. And maybe next year it'll be 97 or something, or 96%. But it's a big risk to invest in a company for things that have not been talked about and things that have not been launched. Now, if you're very confident in Circle being able to handle that and launching that and being like an issuer of other coins, or actually being able to integrate, with Walmart, with Amazon and so forth, maybe, but I don't know.
And I think another thing too is that people are looking at just the total market share. Like how big could stablecoins get? Well, it could get as big as the money supply. Like stablecoins could be $22 trillion right now, and hopefully even make the money supply. Well, actually, hopefully not. But the idea is that international money could go in to buy U.S. dollars as well, potentially increasing the value of each dollar. But I honestly think that the Federal Reserve will come out with, they're not going to tap Circle. They're not going to tap Paxos. They're going to create their own. And they will. It'll be cheaper for them to transact dollars and much safer through stable coins than it will be through whatever current system they're using.
And there's going to be a lot of banks in on this, whether they partner together or go at their own, because they can actually offer yield, and they no longer have to treat it as an asset that is toxic. I can't remember the exact terms before, but under the Basel III amendments and the amendment specific to crypto, they couldn't just say, okay, yeah, we'll hold stablecoin here, we'll let people use it, and we'll back it on a 1-for-1 access, prudentially regulated, all that. No, it's like 2-for-1 or 3-for-1. It made it impossible for banks to actually hold stablecoin as anything other than just a liability. So this is great.
As someone said, how do we capitalize on this? I think the easiest way to capitalize on this is that Visa and MasterCard are essentially a 2 to 3% take on all commerce done worldwide.
Mm-hmm.
If that gets cut by 90%, the savings is going to be crazy, and businesses' overall margins will improve, especially the companies where their entire way to make money is payment processing. So like Walmart, Amazon, PayPal, all the companies that are trying to create their own, the reason why they're the front runners is because they understand that is the massive change in their margins. So all those businesses will be very excited that stablecoins are coming.
And if I can add, since you mentioned PayPal, and I'm wearing the shirt, so
what Iliano is to Palantir, what Roy is to PayPal.
But like, just think for a second with PayPal. They launched their own stablecoin back in August 2023 at a time where I was like, this could be okay. And as I understood what they were doing more and more, it's rolled out slower than I expected, slower than I hoped. They have leveraged it for some good things. But I'm like, man, they were ahead. And they're also ahead on this AI agent, AI commerce, model context protocols. It's something the market has not perceived yet. But I agree with Tanner. The easiest way to take advantage of this is basically look at who benefits and what benefits from stablecoins being rolled out and improved, rather than investing in Circle, which, maybe take a look at that. And if you're like, hey, there's something that we're missing, which could be the case, go for it. But there's a lot of beneficiaries. And Tanner mentioned, 6. It's probably 60 beneficiaries, but the biggest beneficiary is the United States, just perpetuating this global reserve dollar. It's when I was preparing this, last week, when I was going through and looking at the ramifications of stablecoin, I've got a post on this in X. Like, I'm sure I probably picked it up from somebody else, but when I realized that, I'm like, oh man, this is amazing. And what it's showing that the United States government, at least on some level, understands the potential here. I'm sure David Sachs has helped with that because they've gotten out of the way. Instead of like trying to stop this train, they're like, oh, this actually helps us. It doesn't compete with the United States dollar. It actually preserves it. Man, that's exciting. I just wish, like, going back to your comment, Amit, on the Treasury, if these could be backed by 10-year yield, which they cannot,
They will
that
be
would be
soon.
amazing. But
Why can't they be backed by 10-year?
Because if the rate changes in a way that's negative, then all of a sudden you're not backed on a 1-for-1 basis, and you're in danger.
Yeah, depegging would be the biggest risk of the, like, if depegging happened more often, then the Federal Reserve would have a serious problem with stablecoins even existing. So the fact that they've been able to maintain, and there's been risks, by the way, from some of the largest stablecoins. They've been shaky in the past, but they're so much larger now, and the larger they get, the harder they are to potentially manipulate. So similar with Bitcoin. Like, if there was a time to hack Bitcoin, it was right at the beginning.
So the Stable Act or the Genius Act, that basically opened up the floodgates for stablecoins to proliferate.
Yeah, with banks, yes. The OCC changing, SEC changing. It's opening up the gates. I don't think that anyone on the banking side has a clear runway yet, but it's inevitable at this point. It's a question of when, not if.
Yeah.
And so you're going to see not just JP Morgan Chase. You're going to see every major bank, perhaps even in partnerships. Of course, SoFi
David
will
Sachs
be
all over it.
Oh yeah, and then like the funny thing was, last week we saw a massive drop. Like Visa and MasterCard dropped like 6 or 7%. PayPal got hit massively. Pretty much everything that has anything to do with payment processing, I think this was on Friday, got smacked just because of that rumor, which I'm sure is credible, on Amazon and Walmart talking about this. We saw Meta before that. Like every single large company that processes large volume, if they're not looking at stablecoin, then they're stupid. And so maybe Apple is not doing it.
Jerry's funny. He said, "Tanner, you sold your circle early." Like I've got a vendetta to bring it back down. I never had this company. But what's it called? There's another thing too. Like, just because Amit picked Visa or whatever, I don't actually think that Visa is going to die. The same way that because we have fintechs, that means that cash is dead or something like this. But there is
why'd you let me pick Visa if you knew this shit was going to hurt it?
You're my enemy,
curious, dude.
Like,
Like I saw you pick it, and I thought it was just because of that big drop, and you're like, hey, this is an opportunity. I'm like, ooh. So initially when I looked at your draft list, I was like, all right, I'm in. And then the further down I looked, I'm like, dude, what were you doing?
I wanted
to pick up JP Morgan.
Steve
Visa
is going to win.
Okay, I think JP Morgan's still going to do well because of IPOs, but
I'm just saying it's such a different strategy from what you're used to.
Yeah.
Well, I want it to be a little freaking safe. I got all this growth. I thought Visa would be safe. Now you tell me Visa's
Duolingo.
dead.
You spent 20 minutes picking out Duolingo.
All right, I can't wait till Duolingo is at $5.50 a share next year.
Yeah, but you don't even know anything about Duolingo.
I actually have gone through their earnings. I can tell you their growth rates, DAUs, MAUs, everything. Like, it's
okay.
phenomenal.
Go ahead.
DAUs up 60% year over year. Revenue.
What is the number? The absolute number?
I don't know all that. I just know
okay.
that they're growing. Like, I know that everyone needs to learn how to speak languages and shit.
Took 5 seconds, guys. That was it. It was 5 seconds.
No, but in all seriousness, like, out of all the other names that were left on the board, it was either a dividend name or an overpriced SaaS company like a Palo Alto Networks or a Duolingo that I still think has room to grow next year.
And for a 1 year, like you're not looking for valuation, you're looking for narrative. Catalyst.
Exactly. Now, the problem is Duolingo's up 50% this year, so like the upside, we really got to accelerate this whole language shit for another year. But
I love it.
I mean, like, they really are. Like, they replace a lot of what they're doing on the back end with AI, and it seems to be working. It's not made a negative impact on their business. So I like that pick, actually.
Why are you laughing?
Well,
there's
because
a lot of questionable picks you had, but that is not one of them. I think that's a good one.
You said, oh, well, they're up 50%, so they're really going to have to push it. And I literally have a chart open of Palantir. They're up 500% in the last year.
Yeah, but it's Palantir, bro.
I get it, but that's like...
And Robinhood's up a little.
Look, you guys...
That's the delusion of Palantir, where the numbers don't even matter. It's just Palantir.
First of all,
that's the only thing that matters.
First of all, I actually care about my soulmate. Okay. Unlike some people that had multiple opportunities to be with the person they loved.
Two. I had 2 opportunities.
No, you had 3. You picked NVIDIA first because for whatever reason. I'm just saying.
For what?
You had 3 opportunities to be with your soulmate, and you freaking picked Nubank, ServiceNow, and NVIDIA. number 1 was like, give me Palantir. Give me.
Look at you spineless little worm trying to throw me under the bus live on stream right now.
Give me the company that changed my life. I'm going with them, up or down.
I've explained it 6 times.
Now I do. Oh, go ahead.
I would trade it right now. I would do it.
I'll trade you Duolingo for SoFi. Or you don't have SoFi. My bad. I forgot.
Travis and I are still trying to get organized. We love this idea so much we want to steal it. So we're still trying to get this organized, but we're also kind of mad because we weren't invited to this.
Dude, to be honest, I wanted to invite a lot of people, but literally 5 people took 3 hours. So there's no way we could have done that.
Oh yeah, no. But I mean, it's a lot of fun. It exposes you to some different names. Like I was actually proud. Was it ServiceNow that you picked third, Tanner?
Sorry, ServiceNow is third.
Third, yeah. I love that pick. I thought that was great.
What? I hated that pick. That's the SoFi pick. Like, do we think? Hold on,
Tanner's
Roy, you think SoFi outperforms ServiceNow a year from now, or vice versa? I think it's obvious SoFi outperforms.
I think the name of the game here is you have high variance names. Steve, like look at Steve's list. Is there a single name there that you expect to go down over the year?
No, but he's not going to win because it's boring, bro. Like you need growth at the end of the day.
With 10 names, you want some stability so that all of these are creative and some have high upside. And he's got that. He's got HIMS. He's got Meta. He has CrowdStrike as well. And PayPal is actually going to outperform where a lot of people.
Oh, that's why you like. Now I get.
But no, like what I like about him
like Steve.
So versus your list, like Visa could really come under a lot of pressure. AMD might not do much of anything. Palantir, I like it, but I don't like it like first overall. Tesla, I mean, there's a reason why we've been trimming our positions, right? Apple, like I hate. And Grab, I think it's just it's not going to gain a whole lot. So I think you're going to have a mix of some really good winners and some mix of really big losers. And over 10 names, like that's not what you want. I think you want a lot that are just going to contribute. And that may be the winner for Steve. Tanner, though, has some excellent picks. His is my second favorite out of the list.
I was going to say, you'd have to say that mine is also pretty stable with some outperformers.
Yeah.
If I didn't have TTD, you'd fall in love with mine, but you have a vendetta.
It's being disrupted, but I don't think it's being disrupted as much this year. And I don't know if the narrative takes more of a hit than where it's at. I think that's fine where it's at. Like Coinbase, but like the names that I don't love are like lower down for you. Like you had a lot of value. Mercado Libre is positioned well. Shopify, it's expensive, but it's positioned well.
Go look at the DXY and you tell me if I'm positioned bad on my Latin America picks. I mean, the dollar is such a tailwind for Nubank and Mercado Libre right now.
Oh yeah. No, I really like it. I just like Steve's a little bit better. And then Amit, I actually have you last.
Yeah, no, everyone has me. I like being the underdog here. I really do.
and watch Palantir double, and then Amit wins because of this.
I just want to say, if we assume there's a bull market, whose portfolio is suited for the bull market? Like I'm talking about 7,000 S&P, 7,500 S&P. Like it's obvious who's gonna win.
Matt's.
It's not gonna be Chris.
No, I think Matt's is going to do really well. I think we're all going to do well. I don't know what you mean. All of us are going to do really well in the bull market. I think Chris maybe comes last in the bull market.
You need the highest beta in a bull market. And I feel like my top 3 already give me that. Now I agree with you. Visa kind of sucks. Duolingo kind of sucks. Grab is going to be a hit or miss. I think AMD is going to be okay. But I'm just saying.
Amit's going to come forth and say how he outperformed everyone's expectations.
Thinking about what you guys said, though, like if it's not a raging bull market, if it's not much of a bull market, if it's neutral or even bearish, like maybe that's what Chris was going for. Is he's like, hey, I'm going to win if it's not a great market. And he would. Like, I could see that.
I'll never question Chris's picks. He's done it way too many times where he picks a name that I'm like, what are you doing? And then he'll find 150% that name. So I'm not even questioning any of his picks. He sees something I don't.
Yeah.
There's nothing that controversial in his list. Alpha is the only one that I would say is a little
United Healthcare. I don't love, honestly, but
you would agree, Roy. It's undervalued, like aggressively.
Maybe.
I mean, dude, UNH is undervalued.
I don't know anything about it, so
I don't know. I hate insurance companies as an investment. I do. Like that's why one of the reasons why I've not looked at Lemonade. That's why I looked at Oscar briefly, and I'm like, nah, it's not for me. I feel like UNH is vulnerable, and that's one of the reasons why it's down. Like it's cheap, but for a number one pick, first round pick for me, like I would not be picking a stock based on valuation. Like PayPal, I wouldn't pick that first overall. Like that'd be stupid. Like third round would be great. Fourth round would be good. But yeah, like Nvidia makes sense.
Real quick, speaking of Nvidia, we got a meta upgrade from Oppenheimer just now. Not upgrade, but well, yeah, it is upgrade. But look at the
Nvidia.
Oh yeah.
Well, no, because they're spending 68 to 85 billion on capex. So Oppenheimer thinks they're doing another 13 billion or 15 billion.
Yeah, I think that's a WhatsApp, or at least part of this is probably from WhatsApp and monetizing that through advertising. So that's really good for Meta.
85 billion.
And a lot of it's not quite a walled garden, but a lot of the effort that I've seen from Meta as it relates to advertising is to try to keep people in the ecosystem that they don't have to leave and they can still make the purchases. So like it's smart. Like I don't love that company, but like it's a great company, great CEO. I just can't invest in it.
You know what we should do? This would actually be a lot of fun. We should end this and wrap this shit up. And
Did you say wrap this shit up? That's so aggressive, bro. What the?
And
I thought you're Canadian. What was that, bro?
Well,
Can
because
you
we keep
redo
doing
that?
this
Apologize to the audience and redo that. That was
my bad, guys. I love you. We're all live like 3 times a day.
It's not enough. Be 5 times.
We said every week that this is going to be an hour, and then we go an hour and 30 to 2 hours whenever Amit controls. I already know that whenever he starts to wrap it, it's still going to be another 20. So I'm just getting the 20-minute timer started here. That's it. So
anyway, what were you gonna say?
What was I going to say? I'm saying let's.
Oh, I thought you had something to follow up with. Let's wrap this shit up.
I want to go. I want to have I want to work out. I want to have a sauna. I want to go to bed.
It just you sound like a diva, but I love it. It's great though. It's great. I love it. It's 11.
Got to get my my sauna on, my sweat on.
Okay, cool. All right, so that's it. We'll be back next week. So Robin will have a demo tomorrow. I'm sure all 3 of us will be tweeting and talking about that. And then next week is not the crypto thing, the week after. So in 2 weeks, we'll get an update on that. And then we'll keep going from there. Yes, Tanner does have a sauna in his house.
Okay.
Dude, that is a flex, bro. Having a sauna in your house.
They're really not that expensive. I was talking to Steve, and he's like, how much money do you make on a video? Aren't those things like 60 grand? And I was like, you could remove like a 0 from that. Like they're really not that bad.
Yeah, they're not too bad.
But
still, it's nice to have. All right, cool. That's it. Thank you, everybody. Everyone's Twitter and YouTube's in the description. We will see you guys next Monday. And yeah, we'll keep going from there. Thank you, everybody.
Peace.